Hi, welcome to the Market Alert for Thursday the 20th of April 2017. So let's have a look, see what happened yesterday. Another interesting day. The market opening, trading sideways. Quite a bit of volume around here. You can see as it kicks off proceedings, and then you watch it vanish in just a second. Market, you can see now once we're in action, and interestingly enough, this bar here, not that I'm going to go through every price bar for you, but this one that goes through the entry price is on lower volume, and then of course we've got the support here at 20,500. So an interesting area here because the market's got to get through this, and it's unfortunate that the scalp is actually below it. So we're going to need some serious price activity to drive through, but we all know what happened yesterday. The market traded to it, and then you'll see how the price action came back to the entry price, came back above it, and then started to move higher. We then had an opposite signal, a buy signal, and the market's waiting for the crude oil figures. And as I've said in the last several weeks, the crude oil figures now, high impact, shouldn't be, because they're having no impact whatsoever. At one time when they were the price of oil dropped by 70%, then it had a major impact on the market, but now it's rallied a bit. It really should be redefined again as a medium news sort of impact, and not high impact. So the market trades sideways, but what you've got to remember during the trade is this, you know, again, even in the daily chart, we're seeing this in the 5-minute as well. The market's struggling with that average. I mean, it was fine in the pre-market session, but once we got to the main session, when all the boys and girls come out to play, you can see there the market is struggling with the 20-bar average. So you can take some sort of comfort from this by just stepping back, and that's the key. The psychological aspect of trading is to step back, remember the bigger picture in the daily chart, which we'll get to in just a moment, and then seeing things like this. You know, the market's got this resistance in this area. It's always quite worrying when the market starts to bounce back and you start focusing on the potential loss, and then missing the important things like the market failing to close above the 20-bar average. So the market gets back below the entry price there. We then get into, there you go, there's the crude oil figures coming out at minus 1 million barrels, which really should you know, have the effect of moving the market higher. Or just unfreeze the screen, but doesn't. The market plunges low. Let me just wind that back. When you draw on the screen with Camtasia, it actually freezes it, and then when you release it, it jumps. So there you can see the market then driving through the scalp, and you know, remove the entry price and think, well, maybe we could be onto something here. We could see a bit more weakness, but it doesn't materialize. The market, you can see the volume building immediately as we get to this point here. It's building fast, and think, well, it hasn't really done a lot, so let's just pull the plug on this one. And we don't know what hand the market's going to play. But you can see it comes back there. It gives you the chance to pull a few points out. You can see I've removed the trade from the chart there, and then the market becomes sideways. And the reason for this, let me just go a bit further into detail. I mean, I keep going on about this, but again, you can see how the market's come off the actual low there. The volume is increased, but not as big as it was over here, but there's still some buying around. Now what's important here as well is that the market, even though there was some support, is making lower highs as well, and again we're still below the 20-bar average there. So moving forward, we see the market finding some support, coming back up towards the 20,500 level. We get a potential buy signal. We can see that the selling has disappeared for the time being here, and then let's just wind forward. Market goes back through, it's through the 20-bar average, goes through the entry price, and there's a problem, Houston. And that problem is, if anybody's spotted it yet, is here. Low volume. Nobody's buying the market. every price bar is on low volume. There's nothing to drive the market back to the upside. And with that, we go into the New York lunch hour, and there you'll see the market come back. As soon as it breaks the support at the 20,500 level, the market hits the stop. So now what we've also got here, again just to confirm as well, we're now back through the 20 bar average. The average is remaining red as well. We've got an indication that the market is weak. We know it's weak in the background because of what's in the daily chart, and now we're having this confirmation being confirmed in the intraday as well, because the buy trade has failed. No one's interested in buying the market. We're back below the moving averages as well. So I'm going to fast forward now. You see the market moving lower again, and there you can see again these just keep coming up, and they're brilliant because this bar's come off the high. You can see there's the close, volume's massive. We've got some selling around. We know we have selling around when we see this type of activity, and then we'll see the market eventually catch up with that, staying below the moving average, coming back to the moving average into the evening session. Market just turning green slightly on the moving average, and then we get another sell back below the average, and then we break the support and off we go. And an interesting bar again coming in here. You've got an increase in volume, market coming off the high, but this isn't this is people taking profits. This is the shorts covering, as they call it. So the market continues to move lower. In just a moment, there you go. So the market goes through, and what I'm doing here is drawing on in real time to show you where profits can be taken, again because of this situation here where the volume is increasing and the market trying to find support, and that's when I called it a day. But the market then, as I said, watch out in the daily chart, and in fact I'll switch to that now so you can see it in real time. Here we have a situation where the 20,409, which I mentioned in my email, has actually been taken out, and that was taken out, if I can just get the right chart, you can see the market hugging this line now. So this is the catch up to see what happened. Finally you can see the market broke through, and now it's like a bit of a magnet. It's trying to hold at this level. And the reason for that is because of what we've got in the daily chart here. So there you go, that's yesterday's trading. And news wise today, what have we got? Barmy-Khan is out. Oh blimey, we got Treasury Secretary Munchin speaking, the crook from Goldman, the man in charge of the computer programming at Goldman Sachs. He's speaking at 6:15. Best stand aside. We don't know, it's the first time he's spoken since took the job with Trump, so maybe worth just standing aside until, and who knows what the market's going to do up to that point as well, because obviously it's his first time speaking. So we'll take a view after 2:30, see what the market's actually doing. And finally, on the implied volatility, we've got this at 1175 increasing yesterday because the market moved lower. Right, that's it. Again, that's consistent with what you'd expect with the market moving lower. And like I say, there is weakness in the background now, and it's interesting. It's going to be interesting to see if the market can hold at that 20,409 level. What I mean, hold below it, not come back above it. If it comes back above, it might find some temporary support, but at the moment the way forward for me is that as we head towards the 100 days, or the first 100 days of Trump's presidency, which ends I think on the 30th of April, then it's going to be interesting because whatever he's offered has not come to fruition as yet, and the loss of confidence. We've also got the debt ceiling being hit as well, and they're burning money at the rate of 75 billion a month as I record this, so that will run out sometime June as well. So I think it's going to get pretty volatile as we go forward. And also then as well, you've got the sell in May and go away as well, that generally happens. It's quite regular, which I think I recorded a video about that last year, which is on the channel somewhere. Right, that's it. I will see you in tomorrow's market alert. As ever, thanks for watching. See you in the next one.